Good morning, everybody. Sorry, we didn't do a pre-market prep. Some of our team was tied up, so just going to go live at the open here, and we'll just go through stuff live quickly, and I'll just be hanging out for a little bit. Let me update my. I'm going to update my TradingView script real quick, and then we can talk about some levels. Let me know if anybody has any questions, needs anything. Be happy to answer. I'll go over 0DT here in just a second. I'm just updating my script. There we go. So just updated my script live. Obviously, that's how long it takes to update our script in the morning. So fairly seamless. So good morning. Good morning. Welcome, everybody. Let me update my 0DT stuff here to FOMC today, obviously. So after this initial move, we'll be watching. So Drunken Sailor range did not change that much from yesterday. 68.30, 68.75. Not much change there. So we're right at the bottom of Drunken Sailor range, already getting a little bounce there. 50 to 60. 50 to 55 is transition. Pretty much the same as yesterday. GEX transition, DEX transition slightly higher. So we'll just take that out. Put 0DT there. Drunken Sailor range. Looks like we're bouncing off 68.30 already this morning. COTMP for SPY. COTMP for Qs. So historically, that's where out of the money puts go in the money. And usually we see some sort of monetization into that level. So that's kind of what we're seeing there. Let's go ahead and jump into 0DTE for the day. So put dominated to start the day, Drunken Sailor range, 68.30 to 68.75. You see GEX and DEX transition there. We've highlighted the PGEX and INGEX now on the web app. I think that's a nice little addition. So PGEX and PGEX is 68.60 to the upside. That's right within the overall Drunken Sailor range as well as the transition area. We're bottom at the Drunken Sailor range. So if we lose the bottom of DS here at 68.30, I'd be looking towards 68.10. And you can see this significant charm support comes in for these out of the money puts. So as long as we're above this level, this should continue to be supportive. Put dominated, as I said, though. So upward movement's probably going to be difficult, at least in the initial part of the day after the open. So that's where I'd be looking. Like I said, I'd be looking down towards 6,800 most likely if we get below the bottom of Drunken Sailor range here and continue to maintain that. The MTM, let me grab that this morning MTM game plan. Sorry about that. So MTM this morning, obviously this is based on the tick index and how we look at the overall trend of the market. We continue to see weakness. The bolded white line is the intraday instantaneous CT from the close last night. So we're below the Bro tracks and moving averages. So that was a little bit weaker. A colored ribbon is still red above cyan and expanding to the upside. So longer look back period, we're still bullish on that unless we see the bolded white line, which is the CT, really start cutting through these shorter term moving averages. So we'll watch that. Historically, what happens is after a longer term move or a swing move to the upside, we'll see this cumulative tick start to pull back into the overhead red line, which is a colored ribbon, and then usually we'd see and then we'll see a bounce off of that if we're going to maintain the uptrend. So that's what we watched for this morning. So as you can see, I said we've already pulled back to the bottom of DS, bouncing this morning. So historically, that's where we would look for an overall trade back to the upside, but low volume today, low OI heading into FOMC. So really not planning on doing much. unless we see a significant risk off move, which I'm not really anticipating that at the moment. So all right, so welcome everybody. Thanks for joining us. Let me know if you want to go over any individual tickers heading into this morning, but that's just kind of what we're looking at. Again, not really expecting much until after the FOMC. So looks like IWM's bouncing. So all right, so bouncing off that 68.30 area, IWM looks like it's trying to break out to new highs for the day. Q's lagging a little bit, but we bounced at that COTMP level, so it's proprietary GE level where out of the money puts become in the money, and historically you'll see a monetization event at least into that into that area, and then you'll see a short-term bounce. So. There we go. So nice move off that bottom of DS as well as COTMP. So nice response there. So we're back in the middle of the DS range. Below transition though, so that still leans a little bit more bearish. You see zero GEX and P-trans overhead. So as long as we're under 68.50, give a little edge to the bears for weakness. But IWM moving up there. So we'll wait a few minutes. We'll get our initial intraday volume run of call versus put speculation. Again, early on, usually it doesn't give us a significant amount of trend and overall direction. I would anticipate we're going to see, again, significant low volume for most of the day into the meeting. So here's our minute chart. You can see where those high sensitivity levels are overhead and under us. So most likely we'll just chop between those two areas. I would anticipate most likely just continue to chop around those areas. Yeah, so this is one of our automated tools that we run. Again, just gives you an idea of where the high sensitivity areas are and where you could see some reaction or interaction with the price. So already reacting as you would anticipate. We had a low of 68.24, so it was just above that lower sensitivity area there. And then overhead, you see zero GEX as well as P-trans, and then plus GEX is 68.60. So significant overhead hurdle that we need to get over. So we need to see a large amount of out of the money call speculation coming in to move through that level overhead. So I'd look for some sort of stalling action into this 45.50 overhead. And if you're advantageous trader and see a failure, that might be an area to short. But again, with the low volume, we'll probably just chop around between these levels. So. Okay. All right. Let me know if anybody has any questions. Like I said, once I go over any individual tickers, just hanging out this morning since we didn't do a formal pre-market prep. So is 1912 big? Got a range for that as it looks now. 1912. Let me ask what Let me ask what you mean by 1912. Let me know, George, what you mean by 1912. Oh, December OPEX. Sorry. Yeah. Let me pull up our web app. Sorry about that. I see what you're saying. Let's see. So from an it's actually only 18% compared to the, oh, sorry. Actually, it's 7% compared to the end of the month. So that's interesting from a standpoint there. Let me just do the regular SPX. So that will include both. So this is your GEX by expiration. So the 19th is 18%. The 12th, actually, which is this Friday, is 10%. So significant roll off for this Friday. And then the end of the month is 9%. So yes, the monthly OPEX from a combined standpoint is fairly large, but from an SPXP standpoint, which is your weekly, daily expiries, it's not really that large. Actually, this Friday is the highest, and then the end of the month is the next highest. So that's interesting. So from a monthly OPEX standpoint, SPXP is not large. Combined is large, but yeah. So, yeah, I mean, positioning into OPEX with FOMC, I would anticipate. I discussed this on an X Open Spaces last night, that our range most likely would be down towards 67, 65, 70 area, up towards 6,900. That was kind of the range I was looking at. And the expected move for this morning, I think, was 60 point. Let's see what the expected move for today was. So 64 points roughly. And here's your expected range, 67.75, 69.05. So 0.94%. That's the expected range for today. So that's about right. So that's why I was looking at down towards that 67, 70, 75 area, even on out past FOMC. So yeah. So yep. Yeah, sounds good. Yeah, so we're testing the underside there, zero GEX, P-trans, kind of where you'd expect. Expected bounce, bottom of DS, like we always talk about, bounce back to the middle or lower end of the range, and then we have overhead 45.50. That will probably cause us some stalling issues, most likely. So let's look at our net stat command. So net stat command, this is high sensitivity levels. So 68.10 to the downside, 68.50 to the upside in the money puts. You see this very low OI. So again, choppiness back and forth. Net charm, fairly balanced. Net gamma, fairly balanced. And Vanna, possible tailwind, slight edge to the right-hand plane if we see a drop in volatility and out of the money calls. But then 68, again, 68.75 is that overhead area. So, yeah. So that's where I'd be looking. So we already got we were above the 68.10, but now we're looking at the 68.50 overhead, and that's pretty much where we're stalling at with zero GEX there at 45. So I'd be there. I'd be watching for some failure, stalling, however you want to put it. I mean, if you're opportunistic, I mean, I think we're just going to continue to chop. So if you're opportunistic and wanted to see us test transition and fail, again, that, if it fails, that could be a short opportunity, depending on, how you're looking at and what you're trading. I'd like to see one of our vol M runs come in and see where market participants are positioned, where they're transacting, and see what our volume is. I'm going to be probably extremely low. So here's our first vol M run. Really not a significant amount of data, but basically this is crossing pattern. So this is consolidation. If both of these were upsloping, then that'd be calls in control, and downsloping would be puts in control. From a volume standpoint, really not much to speak of. I can drag this over, but so volume was 300 contracts at the open, so very low. You got that initial push up in the puts, as you saw. So weakness came in and then all the way dropped back down. So the put volume just collapsed as well as the call volume. So just not much volume there. So we got the initial spike in puts, which, gave you the move down, but then most likely some monetization into the bottom of DS. And now we're just chopping around at the 45.50 level. So we usually wait for a few more minutes to get our initial volume runs. If we see some failure here, failure to push to 50, we can run back down towards the bottom of DS and possibly even down towards 6,800 if we actually get some puts come in. But this is your line in the sand at the moment, 45. So, opportunistic if you're shorting against these two levels. I think, that would be where your trade would be. And then your stop would obviously be above 50. So. So let me know if anybody needs anything, has any questions. Thanks for joining us. Check us out at gameedge.us. You can put in that's our MTM. Put in your email for our free newsletter right here, and you'll be delivered newsletter for free on the weekends. This goes over our thesis, how we navigate the SPX option structure, as well as all of our tools. And then check out our education courses. GameEdge FastPass is a flagship options course. So you can check that out, as well as our blog. Tons of educational articles. We post these on X and go over our content with how we use our tools. So you can check all of those out. So yeah, again, nice short there at 45 probably. Some failure. Not really seeing a significant push lower at the moment yet, unless we see a ramp in the overall put volume. So we got another run here. Still looks consolidation, not much change. So IWM trying to push out to new highs there. So proprietary levels coming in to work fairly well so far. So if you did take the bounce off the bottom of DS, if you were a very active trader, you had a good area overhead to take profit into. That was most likely going to be difficult to get over. And that's why we continually like to put these levels on our chart with the scripts, because it just gives you an idea of where market participants are positioned, where the option structure is located. And then if you do match that with a little bit of your own trading style, which could be TA, VWAP, moving averages, and it just gives you a full perspective of what's happening with option structure, as well as where market participants are positioning at. So we usually do the same trades over and over for us. Our if-thens are bottom of DS. We usually look for a reaction. This can be an opportunity to go long. If you move off the bottom of DS, and then we look for those overhead levels, the sensitivity levels where we see some stalling. And usually that's at 0 gex or transition. We already started reacting at 0 gex very quickly. Like I said, that could be an opportunity to short with a stop just above 50. So you're probably in some profit now on the short versus 45. So that was probably a good trade. I would go ahead and take some profit into this move back down, and you can trail some. But yeah, so what we look for is just reaction with these, option structure levels and how price reacts. If you're coming from the underside, we look for failures in a put dominated, weak market trend model environment. If we're coming from above, we look for supportive type action. We always say the transitions matter. And if you're coming from above, we look for those transitions to be supportive and hold and move back off of. If you're within the overall drunken sailor range, again, those are extremely choppy. So those are very quick trades. We're not looking for, trend trades on those. Those are just quick, scalp trades that you can open fairly quickly. Again, we look for those overhead areas that we do not think price is going to go. That allows us to sell above those areas. Or if price is not going to go below, that gives us an opportunity also from a structure standpoint. So we look for areas where price most likely will not go, and that gives you an opportunity to structure some options trades around those levels. So IWM still leading the pack there, fairly strong. So. All right. Thanks everybody for joining us again. GameEdge.us. Check that out. Put your email in. You'll be delivered our newsletters. And follow us on X as well as YouTube. Like and subscribe there. You'll be notified when we go live. We try to do intraday stuff as well as pre-market stuff. I was a little late this morning, so that's why I'm doing an open live session here. So again, 45.50 is those overhead areas we need to get above to give the edge to the bulls. If we're below, we'll still give an edge to the bears and weakness. Also like when we have the confluence of transitions, right? So this is 0DT transition as well as full expiry transition. Full expiry includes, all the expiries via our web app, and then the 0DT obviously just specific to 0DT. And we have either script. So if you're a 0DT trader only and just want to see the 0DT levels, then you can put those on there. But when we have a confluence, this just gives me a greater confidence that these levels, options positioning levels structure is extremely important. And those are going to be the areas where I anticipate price to react and stall. And that gives me an opportunity to take a trade. And if we get above, then obviously that tells me that, speculators are buyers are accepting of higher prices, and speculators are opening out of the money calls and moving to the upside. So I want to be on that. I want to be on that side of the trade. Until we get over transition, though, we always give an edge to the bears. And then once we get over transition, we lean more bullish, as you've seen from our X post. So yeah, so we just continue to see the volume collapse. It's very low. So here's our few of our latest runs. You see we're less than 300 contracts transacting. So price will just get pushed around very easily back and forth, and most likely choppy. If we're going to have sustained move to the upside or downside, you want to see these ticking off in the volume traded over here, the 700, 800, 900 volume contracts. And you want to see, if you're a bull, you want to see obviously the green line above the red line outpacing, or if you're a bear, you want to see the puts outpacing. But right now we're just very low volume, just chopping back and forth here. So good morning, Will. Thanks for joining us. So unless we get out of the money speculation, I'd anticipate us to be kind of trapped under this transition area. If we do get over it, then I'd look for the top of DS. As of now, I think we had that initial opportunity to short into 45. Nice quick trade. And then this really is the area right now. You'd be continue to look for failure. If you're an opportunistic trader, just right into this area overhead. And then you could, if you're doing, if you're doing some other option structure, obviously you look above 50. That would invalidate your thesis for price appreciation, and below the low or the bottom of DS here could provide an opportunity too. So the same minute chart I just discussed earlier. Obviously, you see the overhead levels. It's really going to be a headwind there at 50. So probably going to keep bumping your head on that. And then to the downside, 16, Let me get the interactive chart for this. I can scroll over and tell you what the, here you go. So we're looking at 68.44, 45 down here. So that's a pretty large negative GEX bar, 17 million, 68.10, sorry, down there, around that level. So, and then overhead, negative GEX bar here. Scroll over a little bit. 68.65, 68.60, 11 million there. So all of our charts at GameEdge are interactive also, so you can scroll over and get the integrals and the numbers, and you can zoom out too, so it's much easier there. Scroll over, kind of see where we're at. So pretty easy to see where we'll most likely continue to keep bumping our head there at 50, as well as 55. It's in trans, right around in there. So, and then negative GEX to downside 68.10. I'd anticipate this to be supportive. If we get below 68.10, it would be more risk off and probably move a little bit more swiftly to the downside. So. So Qs are a little bit weaker, obviously under VWAP for the day. IWM strongest so far, and then SPY just above VWAP and kind of just moving around there. We can get the SPY 0DT. I'm gonna pull that over. You can kind of look at that. So SPY chart looks exactly like the pretty much like the SPX chart. So there's our sensitivity levels, overhead 68, 685, and then downside 680. So I'd anticipate us to just be stuck between these two levels. You see we held P-Trans at 681. So that's on 0DT. This is a full script, so you can overlay those also. So 680 to 685 most likely is probably going to be your range for SPY, unless we get some significant move up there. So volume continues to dry up, most likely just chop around here between these two ranges. Like I said, if we get a push through 45, we'll see 50 and probably 55. And then we look for some overall stalling into that area. Let's see if we can go across the board here. Look at some other stocks here. So Apple's under P-Trans. AMD had a nice move up. It's above P-Trans. Alphabet moving through P-Trans there. So that's showing some strength. Meta is below all the levels there. NVIDIA above transition, just sideways. Tesla above transition. So those all look good. So it looks like Apple's the only one that's really under transition. A little bit of weakness there. So Google moving through transition, held 0 GEX. So that's also a trade we have here. We have 0 to P-Trans at GameEdge. That's we have a scan for that, 0 to P-Trans, and then P-Trans to P-GEX is the next section of that trade. So again, if we're above these levels, we always look. If we're in a conducive market, we always look for these levels to be an opportunity to get long for a move back up. So nice quick trade there this morning into 0 GEX. Meta continues to try to hold 0 GEX. So you could be long off that level. You had a nice quick move up and could have taken a quick profit, but we'd watch for that level. If we lose 0 GEX, then you'd look for some more weakness down towards NGEX. And again, that's a structured trade with a risk reward that you could take. But we prefer to do 0 GEX to P-Trans, and we have higher confidence in P-Trans to plus GEX. Once we cross this transition level, you're in a little bit more call-dominated positive game environment, and that usually gives you an overall tailwind with speculators to the upside. So that's why we would take that trade. So. All right, sorry, everybody. So good reaction off of Zero Gex there. If you're looking to short, that's kind of just what I discussed. Great opportunity there versus the 50 level. So if, again, this is our game plan that we historically go over. If you're under these transition levels, we look for failure overhead. I mean, just fantastic move so far if you got in short there. Qs breaking down, SPY breaking down. So we're at the bottom of DS. So we'll look for that reaction there at the bottom of DS. If we get below DS and stay below, we'll be looking for 68.10, 68.13. So let me look at my last vol M run here. If anybody has any questions, just let me know. But yeah, that was the game plan there. Reaction failure overhead. That's what I talked about. Multiple tests, and then good opportunity to short versus 50. Nice risk reward. Now you're in great profit. So yeah. So John for hey GM or yeah, hello. How are you? First time here. Looks cool. Yeah. So we have multiple tools. One is our vol M command. One is this is our intraday volume analysis. So this is just the volume status that we're looking at. So you can see the uptick in puts, which was nice here, outpacing calls. You had a quick blip in calls, but then the put volume started rising again also. The other thing is our vol M command. The slope was getting much more negative on the put centroid. So rate of change, we watched the rate of change in slope on this centroid, and if it continues down, that's indicating the calls are not speculating higher, and then puts are speculating lower. So this slope continued to change also, so indicating we might have some weakness coming into the overall complex, which we saw there pretty rapidly. So which is awesome. That's great. So if anybody took the trade at the failure there overhead, let me know. But now you're at the bottom of DS, so this is an area I'd look to take some profit, most likely. So yeah, so GGH, Zero Gex, hopefully you were able to take advantage of that. So, but now we're back by the bottom of DS. So anticipation is that most likely we'll see a bounce back here off the bottom of this, unless we get below and we see how the money put speculation start to come in. If we do, then we look for a move down towards 68.10. So yeah, so I can pull up the app real quick. You can look at it where we're at. So there's where we're at. Actually, we're a little bit lower than, we're back to 68.30. So again, as we talked about, we're put dominated to start the day. So negative gamma, put dominated environment, overhead movement. We're going to look for failures overhead. Going to be difficult for price appreciation. And then I would look for some supportive action down to the bottom here at 68.10 or at 68.30. COTMP is 68.25. That hasn't moved down any. So historically, that could be an area where we see a bounce, and that's the bottom of DS. And you see the charm support start to come in here around 68.10. So this will be supportive on those out of the money puts. And then you see that index level at 68.10. So charm support is weak, and then starts to ramp up into that 68.10 level. So that could be where we see some weakness. If we get below here, I'd see it, the price continue to come down, and then that 68.10 level is where I would anticipate the next kind of supportive area. So hopefully that helps. So, all right. So nice trades this morning if you're able to take them. Nice one, bounce off DS to the back towards 68.45, 68.50, and then the failure at 45 overhead. Stop was at 50. Nice move back down. So hopefully that gave you a couple quick trades this morning. So, all right, thanks everybody for joining us. I'm gonna go ahead and jump off. Like and subscribe on X and YouTube. You'll be notified when we go live. Yeah, Russell had the move up, but again, historically, we look for that P-trans, that crossing in P-trans, and we failed, right? So this is why I love our levels overhead. It really gives you an idea of where the option structure is positioned, where market participants are positioned, and we couldn't get over P-trans. And if you're in a weak market environment, this can provide an opportunity for a trade also. So yeah. So, all right, thanks everybody. Like and subscribe, X and YouTube. You'll be notified when we go live. Everybody make it a great day. Manage risk. I think we're going to be trapped. I'll show you on our minute command. I think we're going to be trapped in this lower range and area. So this also is our volume indication here that we watch. Look at this of the puts. Large put spread was put on down here. I can show you the strikes in our interactive, but this gives you an indication of what's occurring within market participants in real time also. So I like that large put spread. And you're seeing that little bounce off DS there. Let's look at our minute chart. That'll give you an idea where we're going to be most likely. Let me grab this for everybody. So bottom of DS, again, the bounce. So I think we're going to be contained between the 68.10 overhead and most likely the 68.50 area. I think we're going to be contained. If we get below 68.10, then risk is off, and we look for a move down towards 6,800. So, all right. So small bounce off DS there. We'll continue to watch that for the rest of the morning here. And our market trend model continues to weaken some. So that's indicating that speculators are not speculating higher at the moment. So, all right. Thanks, everybody. Make it a great day. Manage your risk as always, and we'll see you later.